Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Rayne Steinberg, CEO of digital asset manager Arca. Welcome, Rayne, to the show. So just wanted to get your overall outlook first on Bitcoin, the crypto markets, DeFi even. What are some of the top predictions you're making?
Sure. Thanks for having me, guys. Yes, obviously things can turn around quickly in these markets, incredibly volatile and still immature, as we can see in a lot of areas. But we've seen tremendous institutional adoption over the last year. So we've seen a very broadening of the investor base, which really at the beginning of 2021 was heavily retail. And there's a lot more institutions stepping in. And we've seen from our pipeline, and we mainly deal with institutions, so think pensions, endowments, hedge funds, high net worth individuals, that they're looking at this as a place to up their allocations, and they have way smaller than like full bites right now. So we're actually seeing allocations and flows coming into the market.
That's interesting. I've heard other analysts and experts say something similar, and that's why they explain we're seeing a correlation somewhat with the tech stocks and the crypto markets. But after the ICO bubble popped, folks thought STOs, security token offerings, a regulated ICO, if you will, would be the next big thing. It didn't really take off, but you also commissioned a survey that suggests there is still hope for it. Tell me a bit about that.
Yes, we're beyond hopeful. These are very long-term things. When you're dealing with regulators, transitions of large asset pools, they take a long time, and there's a lot of players. So I never really changed my view on that, and I thought it was always going to be longer than people thought on STOs. But the survey that you're referring to that we commissioned with Coalition Greenwich, from institutions, financial professionals, market makers, a really broad swath of financial players, were incredibly bullish on securities tokens, well aware of them. Which is, I think you would say, was kind of surprising considering their overall size relative to the general crypto market. And then a hugely bullish when they think about the amount of settlement that will be occurring on chain, with 77% of respondents thinking all settlement and basically equity and securities transactions will be occurring on blockchain within 5 to 10 years.
So, Rayne, if I remember correctly, I think it was around 2018 or 2019 where everyone was talking about STOs, like this is going to be the next big thing in crypto, right? And then they just sort of fell off the map. Like people just stopped talking about them. Like I actually haven't heard those three letters in actually a really long time. So what exactly happens? Like why, and are STOs happening anywhere? Because it's just not something you hear a lot about these days.
Sure. There's about 900 million to $1 billion in market cap of security tokens. These trade on ATSs, which are alternative trading systems that are regulated. And the reason you don't hear so much about them is the regulators and the adoption path for this has just been very long. To give you an example, we have the first 40 active, so the first fund, the same structure as a mutual fund or ETF, whose shares transact on the blockchain. We filed for that in November of 2018, received exemptive relief in July of 2020, so nearly 2 years. And we're still working out things like custody, jurisdictional issues, and all the different difficult things that regulated securities need. So blockchain, tremendous innovation. But when you're talking about going up against centralized regulatory authorities, jurisdictions, these are all just very confusing things that take a long time. This is not, as you guys know, a patient industry. So people just moved on to where the new shiny thing was. But things have still been happening in that space.
Right, now, sort of one of the criticisms of STOs, though, was that like they're really not in the spirit of crypto, right? Because like you had ICOs, which obviously didn't go that well, but they at least were decentralized and they were this like radically new form of fundraising, whereas STOs are a little bit more similar to traditional fundraising, and some people said that that's not really like what's special about it, what's unique about it to crypto. I'm just curious how you address that feedback.
Sure. Yeah, that's exactly right. So when you think about crypto being completely decentralized and not relying on any centralized authority, yes, absolutely. But you also have to look that we're in a centralized world, and that, the lion's share, gigantic amounts, upwards of, hundreds of trillions of dollars are all in the centralized world, regulated in a centralized manner. and with fiduciaries and counterparties that need regulatory clarity. So where people, and a vast amount of the energy in the digital asset space is about decentralization and all the benefits of that, from from the discussions that you had earlier, on DAOs and decentralized governance, you see we're not really there yet, and why there's some discomfort from institutions entering in. So we think that this is very much a middle ground where you can get some of the benefits of crypto. That's instantaneous transference, 24/7 trading, infinitely divisible, but not give up all the centralization. And that can be a value proposition that's very important to institutional players who aren't necessarily looking for anonymity, complete decentralization, or any of those things. And we can see from our discussions earlier that we're not quite there yet. And it would be very difficult for an institutional grade fiduciary to participate in some of those things.
So, Rayne, where are the bottlenecks? We have the technology. To quote the $6 Million Man, we have the technology. We can build it better, stronger, faster. But why hasn't it happened the way we thought it would? What's the specific? Is it specifically regulatory? Is it technology? Because stablecoins seem to have figured a lot of this stuff out. Where would you pinpoint the blame, if you will, and how does it get overcome? What specific steps need to be done?
Sure. I wouldn't really call it blame. I would call it more of a feature, honestly, than a bug. And it's really that intersection of regulatory and embedded institutional practices. Just to give you an example of something that I'm very familiar with, I co-founded an ETF company in the early 2000s. This was almost a decade after ETFs had been invented, and they really came out of the 87 crash. And it took till 93 for even something as simple, when I say simple, the ETF structure is not simple, but it's on an exchange, it's in a fixed place, it was directed by a few controlled players, and that still took 2 years to create. And then even as early as the early 2000s, when I was talking to people about ETFs and traditional asset managers, there was only 40 billion in assets under management in ETFs, and they weren't even sure that structure was going to be the way it went. So that was over a decade after the impetus of ETFs. So when you're dealing with regulated products, and I think that this is very appropriate, where the regulators, this is the SEC, has the dual mandate of investor protection, securities offerings, all these things, they have to move slowly, and it just takes a while. And coming from the traditional world, this type of cadence is not unfamiliar to me. In digital assets, if we're talking about anything longer than a week, sometimes that's too long for people. So I have not been discouraged, and I've actually been quite heartened that this has gone faster than some of our ETF applications in the early 2000s, and this is way more complicated.
Do you think that having Gary Gensler running the SEC actually makes it even harder for it to get through? Is there some hesitancy in terms of in terms of Wall Street adopting STOs because they just don't know where he's going to fall or how much power he's going to try and take to regulate this entire industry?
No, I actually think it's actually quite the opposite on STOs. As they are regulated, there's less uncertainty there. I would say it's probably had more effect on DeFi, the areas of the marketplace where the regulatory footprint is unclear. But STOs and things like our products are actually now energized because institutions are saying, look, we're probably going to have to face some sort of regulatory footprint here. Let's not just pull the plug on innovation and waiting for something to happen. Let's start innovating in the STO space. And we actually have had quite a lot of success in our labs division, which is our innovation arm, working with partners from very large traditional financial institutions that are looking to take advantage of the STO structure to take advantage of what I said, some of those benefits: instantaneous transference, instantaneous settlement, 24/7 trading, breaking down some of those frictions just without the decentralization because you're still dealing with a regulated product. So that's still going apace. It just, it's very slow. It's not a fast pace.
Yeah.